So, good morning, active traders. I'm Ken Calhoun from TradeMastery.com. Booyah! Markets have been rallying lately. We've got lots of volatility. Oh, thanks, Neville, for kudos on the Metastock presentation. Thanks, man. I appreciate it. Yeah, great chart platform. Anyway, welcome aboard, everybody. Good to see you guys here. We've got lots to go over. Let's see. Today is the 12th, and you can see we've got the coaching program. It's my biggest coaching program in 5 years. I haven't done a program like this in half a decade. So, and I only do them it's a lot of work on my part. So I only have energy to do it once every few years. Action coaching program, trademastery.com/action. Take a look at that. All right. So let's put together a trading plan for the week ahead and take a look at strategy. Now, markets have been up lately, right? I'm still using we've broken the previous two peaks here, and we have a bullish engulfing there that led to a move up here. Key resistance on the weekend is going to be that 4,100 mark, or just over 4,100. Maybe that's 4,130. Anyway, before going aggressive long, I want to see the market sustain itself up over that trigger point, because that's a previous peak that Wall Street technicians and quants are going to be using for high frequency trading and all that kind of stuff. So we wanted to break at least over that 4,130 peak prior to going aggressive long. Now, having said that, I did put on a few pilot trades yesterday after the close. I've got a short list of some of them there. I will be revealing the entire list to my live room members on Monday. But I will give you, for all of you visiting, a handful of charts like Coinbase, DraftKings, Beyond Meats, Neo, Plug, and Peloton. That's the half dozen that I started, in addition to my hedge plays and the inverses like UVXY and SOXL. So let's take a look at strategy notes. For the week ahead, strategy is go ahead and fire small darts. Put in small, at least what I'm doing is putting in small feeler trades or small pilot positions, odd lots under 100 shares, little itty bitty, usually under $1,000 worth of capital, and like 20 shares of Coinbase or whatnot. Anyway, put on a sequence of small trades at 2-day highs, right? Things have to close up at a 2-day high. So we want to start a basket of swing trading charts next week. The other thing to pay attention to is our VIX. The VIX has been down and it's long overdue for a bounce. So VIX, remember we said last week, I think it was the 25 was support level. Next support level on the VIX here I would use would be the 21 support, and I'd still use way up at 27 resistance. So the VIX very seldom goes down a month in a row, right? It's very unusual. And if you follow volatility like I do when I trade UVXY, we did not see much of a drop compared to the rise in the market. So we may have a rebound in the VIX. So do keep an eye on the volatility index as well. Now, having said that, let's take a look at some charts here. Now, these are some charts that I bought a little bit yesterday after the close. Now, the entire list will be revealed to my live room members on Monday. This is slightly less than half of the positions, but I thought I'd share with you at least some of the ones that I'm starting to trade on small size. I always martingale in. One thing that I didn't have time to mention in my Metastock presentation yesterday afternoon, really big turnout for that. And thanks to all of you. And Neville, appreciate the kind words. All your trades should be seen as a sequence, a series of 2 or 3 or 4 positions. So I put on some feeler trades under $1,000 of capital in each one for the most part. So little bitty baby trades. That way, if the market has a big crash on Monday, it's not going to cost me much. But if it does continue to rally, I've got a foothold in, and I can then scale in with unrealized P&L subsidizing the entry for second and third entries. So put on a sequence of 2 or 3 trades per position, very small on the front end always, and then you martingale up over time. Now, the rule for swing trading, and you may have seen my stocks and commodities or articles or money show presentations, is thou shalt only buy things that close the day at a 2-day high. Now, I always do my swing trading entries, by the way. This is very different than how I used to trade, but I learned the hard way what works and what doesn't. You have my word, this is at least what I found I'm very happy with. Only enter swing trading positions after the market closes for the day, because day trade, of course, on the open, but swing trade after the close. Day trading with like 9:30 well, pre-market and then 9:30 to around 10:15 or so. For swing trades, you want to go in after the market closes, because then you can see what the range and the closing value is. Okay, and the goal is you only want to swing trade things that are in an uptrend that's closed at a 2-day high. So day one, day two, closed 2-day high. At the end of the day, that's where to start to isolate or scan for and enter your position. So this is one I bought small shares in. For example, I would not want to buy 500 shares of this because it could easily gap 3 points against me and cost me, a lot of money. So small size. Now here's one that I called for day trading at 1410, and that's where I traded yesterday, 1410. For swing trades, this is also a really good chart, right under the 15. So DraftKings, I bought a little bit after the close. BYND, also a good one up here near 15. By the way, I highly recommend, required watching. The one and only YouTube for traders channel that I recommend is Tasty Trade, is Sazonov. Sazonov is brilliant. You got to, Tom Sazonov is freaking brilliant. He and, what's the guy's name? Batista, Tony. The Tom and Tony show. The last call, they had brilliant insights in the market in the video. Be sure to watch Tom Sazonov's videos. He's absolutely brilliant. He's the smartest guy I know. Yeah, Sazonov's the smartest guy I know in the whole industry. He's really smart. So listen to his free YouTube stuff. He and Tony go back and forth on vol, directional vol. They're much more quant and statistics and probability oriented than chart patterns, which is the correct thing to do. Focus on the numbers, right? Like any professional trader. And like I am 100% with agree with what Tom says about trade small, trade often. He mentioned, what is it, on his show, is either last night or the night before, he did 118 trades. And that's like par for the course for me too. I was pleased to see that. I do anywhere from 85 up to maybe 120, but I often have days which I do like 110 or 115 trades. So smart traders trade, you don't have to do that much if you don't want to, but I think you should err on the side of small trades, many of them. Throw a lot of darts, small size, rather than large positions based on magic crossover numbers. That doesn't work. It's a numbers game. So law of large numbers, trade small, trade often is exactly right. Anyway, in BYND, I think is one that I like here with a 2-day high. So it doesn't have much downside. When you put on a swing trade, you should expect that the worst, always expect the worst. Plan for the best, hope for the best, but expect the worst. Expect that if it gaps against you, it will gap down to half of, roughly 50%, and that's kind of conservative, but 50% of the 2-day range. So range is 12 to 15 and a half here. If it bites me in the butt, it may gap down to like 13.4 on Monday. And then I have to ask myself, how much risk am I willing to take financially on that initial position? The answer is always not much, right? I always like the street to pay for my trades. I like to start small. And once I have unrealized P&L in the bank, then I can start scaling in and getting excited, because then even if it drops, I can get out near break even with minimal cost to me. And if it keeps going up, I'm leveraged in. The first sign of trouble, I sell and take the money and run, right? So that's a good chart for a swing trade. I also like NEO. I bought a little bit of that yesterday after the close. That's a good, strong 2-day directional chart. You also want to have hedges in, right? You also want to have inverse. And I do still have quite a bit of UVXY, and I bought a little SOXL because it looked really cheap. I'll look at the chart there in a second. But by the way, if you have tickers you want me to look at, start typing them in. May limit 2 or 3 per person. But if you have a chart you'd like me to look at for a day or a swing trade, we'll assume that it's for swing trades. We'll look at swing trading charts in just a second. Type in the ticker right now because I got a lot of you here. So anyway, so NEO looks good, right? Does everyone understand the 2-day rule? It's thou shalt, it's very simple, the strategy. It's very, very simple, which is what I love about it, because it's non-ambiguous. Thou shalt buy 2-day highs. Thou shalt sell 2-day lows. Incrementally. Period. That's it. That's all, folks. So NEO, that tells me you got to buy that thing, right? 2-day, close it, 2-day high, thou shalt buy. Plug is plugging away up here too. Really nice chart from 2-day range, 15 to 18. Not too extreme and not too shallow, not too choppy. Reasonably clean up chart. I'd buy that. I'd hit that. and Peloton. No, there's quite a few more, and I will be giving those in addition to updates on these to my live room members come Monday. So if you're not yet a live room member, do be sure to join at trademastery.com. Anyway, those are intelligent, those are smart. That's what I trade, right? So, wow, a lot of charts. Wow. Okay, we'll take a look. Now let's take a look at some. Oh yeah, and other charts we covered in the live room yesterday for members. I called this long at 7-7 XPEV. Now I did not take it. Boom. I should have, right? I don't have energy or time to take all my alerts because there's so many. I really need to get somebody to help me with that. Anyway, I wish I had traded my own alert. Back when XPEV was pre-market, I said go long over 770. How much money could you make? Ran nearly a point before the drop. Sophie's another good one that I alerted members to. The 585, now that didn't run too far, so I'll call that a scratch. It kind of closed near that. You can see DraftKings, I called it a 1410, ran all up to just under 15. Snap was another decent mover yesterday as well. Snapchat, now that one looks good, along with Neo and Plug, which we already looked at, and Carnival Cruise Lines reopening play. So lots of charts out there. And the goal is to select out of all these charts out there, they're all moving up. You want to narrow it down to a little short list of 5 to 7 that you can actually trade and hopefully make money with. And that's where I come in, is the goal. So let's take a look at some swing charts. What do you guys have? I need to go. Yeah, right, Kimmy, I agree on Larry. And Jake, let's see. Okay, so hit me with your tickers. Now we switch to the portion of the session where I pull up your guys' tickers. So let's see you guys asking shop, win, FGF, Marathon and Netflix. Oops. So if you want me to look at a chart and give you my honest take on what, first of all, is it worth trading in the first place, which like 70-80% fail that. Remember, guys, we want clean, wide charts. You don't want choppy ass wide charts. Let's see. Click. So give me your favorite ticker. And I got so many of you here. I'll do as many as I can in the time we have available here. And now's a good time to ask. I know how to trade. I can help you with this. And this is one thing that my live room members like a lot because they get to ask live real time for both day and swing trades every weekday, Monday through Friday. So let's see. We'll go through these in just a minute. I'm trying to. Question from John, is today considered buying after the close? No, after the close of the day. So Friday at 4 o'clock is after the close on Friday. Okay, guys, we will go through these charts. Wow, I got tons of charts here from you guys. That's fine. Hit me with your charts. I'm here to help, right? That's what I do. We'll go through all these briefly. Oh yes, okay. Let me go ahead and get these underway here. GDXU. A question from John Wise, 4 o'clock Friday different than buying on the weekend or a night after the close? Well, you can't buy stocks in America on the weekend, so that's why. Okay, let's take a look at the charts. I put on my swing trading positions Monday through Friday from 4 to 4:15 or 4:20. So I put on my entries there, and then I trail stops, either trailing stops or hard stops. I put those on in the morning before the opening bell. And oftentimes too, if something gaps up pre-market and starts to fade, I will sell at the first sign of a bear cup reversal to lock in the profit. And then if I want to re-enter, I'll wait till end market and go in above the high. But usually gaps that start to go down keep going down, or they chop around. So it's a good place to exit. All right, let's take a look at these charts, guys. Thank you. Thank you very much. I would sincerely appreciate it. You got 3, 6, 9, 12, 15, 18 charts from you guys, and a big turnout today. Let's go ahead and take a look at these charts and see if they suck or if they're worth trading. Okay, let's see. Shop looks wonderful. That is a brilliant chart. I'm not in it, but I will probably get in on Monday or Tuesday. It's done a bullish cup recovery. It's come back up to over the 40. I like buying, by the way, within the low numbers of decade ranges. So between 40 and 50, here's a good place at 41, 42. The exit target would be at like 48, 49. Just like in day trading, we like to trade within whole numbers. Like if we buy $11.10, we want to sell $11.90. We trade within that 11 to 12 range. On swing charts, I like the 10, kind of like a Darvas box approach. I like the $10 increments. So I like entering. Just as a note, I sell nines, I buy above the decades. And this one is right testing the decades. So that's a good chart. And it's in a nice strong uptrend. Last couple of days had really strong price action in Shopify. So that's a go. Win also looks good. And again, same strategy. It's right under 80. Again, these are not trading recommendations. It's just my own personal opinion of what I'm looking at for my own personal trades that I'll share with you. But I would go long personally if it gets over the 80, say at 80.3, 80.5, something like that. So above the decade value, with the exit target would be 88, 89, right? So that's good. FGF. Yeah, that's good too for a cheap chart. There's two things you want to look at in charts. The first is range. Is the range risk reward worthwhile? So, for example, a $20 stock on a swing chart should have at least 5 or 6 points of range. You don't want to trade a $20 instrument that has a $3 or $4 range because your risk reward isn't worth it. You want the bigger the range, the better. And the other thing you want to look at is the directional strength, the directional volatility of the trend, particularly following large green candles, which is a, drying up of liquidity, of people buying a lot of shares, hence the large green candles as demand outdoes supply, and we end up at the high. And we did have a really big green candle on this thing on Thursday. So that's a go. That's good up at new highs. And I would buy any new higher, 260. Again, trailing stops. Remember, for swing trades, it's very, very important and very simple to understand, right? It's really easy to understand. 2-day charts, you scale out of or stop out at the 2-day low. So if the previous day is, say, 20 to 22, and you buy, say, at 23, that's fine. But if it gets down under the previous day's low at 19 or something, you sell. So use the 2-day basis, you go long up at a 2-day high and sell, or stop out or scale out at a 2-day low. Very simple, right? And test it for yourself. I think you'll be impressed. You've seen the thousands of testimonials I've had on my websites and the rest of it. You'll see how popular my training is with traders because it's relatively simple and it's based on directional volatility and relative strength and trading ranges. It's intelligent. I'm a former corporate statistician for Ford Motor Company and a UCLA graduate, and I've traded $41 million worth of stocks last year. I'm very experienced at this. So hopefully I can give you some simple, easy to use things you can start testing out. Test out this free stuff I'm giving you here free, and hopefully you make a lot of money and then you want to join the room and whatnot. So that's my goal, is to give you enough to get started with, so that you're in good shape. Anyway, FGF, that's a go. That's good. How about old Marathon, one of the Coinbase plays? That's a horrible chart. No, I'm long coin for Coinbase play because the big green candle, all right? Large green candles. Johnny, tell them what they've won. Anyway, large green candles, bullish engulfment. That's a bullish engulfing wrapping around the doji of Thursday. And again, for candlesticks, be sure to learn from Steve Nissen only at candlecharts.com. He knows what he's talking about. Anyway, the big green candle's good. So Marathon, that one absolutely sucks. Okay, I day trade. It's fine for day trading, but not for, that's a horrible chart for a swing trade. Netflix, that really sucks. That's a bad chart. You want to evaluate the chart based on relative strength, trading range, and likelihood of making money, okay? Now, this would be fine for day trades. So it's a lot of what the charts you guys pick are fine for day trades. But for swing trades, we have to be a little more stringent in our criteria set. This is testing resistance at the 300. And again, that goes in nicely with my strategy of you sell the nines or like 290. You would never buy it here. This would be the worst place ever in history to buy Netflix, between 290 and 300. I would not touch it unless it gets over 310. And I don't like the range for, well, the range is okay, I guess, for a $300 stock, but I don't like the recent range. It's too wide. Sometimes the range is so wide that your risk, it elevates your risk. I prefer charts that, go say from 20 to 40 over the course of a month or something, and I can scale in safely. I don't like charts that have big $10 ranges. That's nuts. I could lose a lot of money trading this the wrong way, so you're fired. KLAC. Range is okay. Directional trend, it's coming back to life. Maybe if it breaks the 50, the setup I'd want to see is a large green candle. By that I mean a candle like yay tall or close, a large green candle, and get in over the 50, but I'd stay clear for now because we have a shooting star yesterday. When you wish upon a shooting star, you don't want to buy it. Bomb. Ford Motor Company. I don't like Ford here. And it's indeterminate. 25 had been the previous peak, right? It's got some range, but I'm not interested. Not here, no. Because it's coming up off of lows and it's already run. Now, Starbucks, this is an absolutely horrible chart. This is the worst chart I've seen all day. Shooting star, narrow range, expensive stock, indeterminate choppy ass trend with only a little recent bit of buying flurry. Why on earth would you trade that when you could trade something like, I don't know, something that's running instead, like that, right? The XTR, that was a good chart. That's a good chart. One of you guys had mentioned this one a couple of weeks ago, NOV, that's a good one. Solars have been hot lately too, a little bit. SunPower is up. But Starbucks, nah, I don't like it. Decaffeinated, you're fired. I mean, I would not trade that. AEHR, that one's actually okay. It's not as clean as I like, but it's got the volatility. It's got the range, and it's strong. We've got recent green candles up there. So that one, I like that over, say 26.20. So yeah, that one's a go. I would trade that. PLTR. That's a horrible chart. No range, no directional strength. TDOC, another horrible chart. Indeterminate trend. Val, it's okay. It's all right. I think there's better out there. I'd give it a B minus, but it's tradable. We'll leave that on. I'd hit that over the 70, right? We don't buy a 69, we buy a 70. That's a great chart. I like that one. What's that one? PSN. What is PSN? Somebody tell me. What is PSN? Makes me think of my PlayStation or something, but that's a great chart. That's a good example of a clean directional. Now it sucks yesterday. It sold off, but if it takes out new highs, or say, and again, this is another good validation of my thou shalt not buy nines rule, right? You see my rules are so freaking consistently correct, right? Never buy anything with a 9 in it for the rest of your life. Don't buy nines. Just say no. Stop the madness. There's got to be a better way. Don't buy Bitcoin and don't buy nines, right? 49, for example, would have been an absolutely terrible place to buy this. It's a good exit target. Exit targets are nines. So if you bought the 40, 41, 42, 43, exit target's 48. If we buy the 51, exit target is 58, 59. So the range is within those dime increments, those $10 increments. Parsons Corp. Okay, thanks. See, somebody asked about volume on FGF. Yeah, and there's a rule of thumb, we want at least 1 million shares a day. Okay. Yeah, volume sucks on that. So let's belay this one. Yeah, good point. Thanks. Yeah, volume's no good on FGF. So despite the price action looking good, and thank you for the heads up for the catch. That's something I would have caught myself before pulling the trigger on a trade. I was look at volume. Daily volume should be at least 1 million. Okay, so that one's fired. Others obviously are. I know Shopify and Win are going to be, right? 40 million there, 6 million there, 2 million there. Almost enough there. PSN's good. Now, Costco usually doesn't have enough range to make it worthwhile for the price you're paying. So I don't like $500 stocks that are bouncing off of lows. That's a horrible chart. Costco, you're fired. And just because a talking head talks about it does not mean it's an appropriate trade. There's been some talking heads who were saying long the market ever since January, right? I won't mention any names, but ignore talking heads. All that matters is price action and risk management. Price action, directional volatility, the statistics, the spread, the range, increasing ranges are good, decreasing ranges not so good. That chart sucks. Okay, let's see, LVS. Oh, that's a horrible chart too. Choppy as F. I mean, how could you successfully navigate that chart? No. Halliburton, that's a great chart. Hal is great. I mentioned this one, I think 2 weeks ago. Oil service, right? Energy and oil is good. Hal's good. I'm sure XLE is probably pretty good too, right? Energy ETF. Yeah, XLE is great. Like Hal, right? Similar charts because there's some same sector. So Halliburton looks great. Our XLE energy ETF looks great. GDX, if it bounces, it is starting up here. Wow, it did a nice, it almost doubled off the low from a few weeks ago. That's a good spot. Yeah, definitely we're 46. And ditto the same thinking for GDX, it's equivalent. PTLO. It's okay. The range isn't great, but I like the volatility. Let's take a look at the 2-day chart. Definitely be good for intraday. Well, and the volume's a little sketchy. It's okay. Okay, but not great. So let's fire it. So let's now whittle this down to a short list here. TBT, don't want to trade that here. EXTR, that's good. KHC, nope. NOV, that one's good. SPR, nope. Now the ones I'm trading, again, coin on the pivot. Now most of these are like, they got really sold off. They've got really big upsides on the 1-year chart. So I'm putting on very small darts at these guys. So you can see a hammered out a base there near the 12 Monday, right? And this is DraftKings. I bought a little bit of that yesterday. I bought a little BYND because it did a pivot, right? This is one that big range, right? One thing I mentioned in my Metastock presentation yesterday was that on a 90-day chart, you want to see it get cut in half or more. If you're looking for bounce or pivot plays, you want charts that have been cut in half or more so that you've got really big ranges that are extreme. You want to play the extremes. You don't want to play something that's steadily grinding down. That's usually a short, not a long, all right? You want to be directionally correct. I like NEO on the bounce here. About a little plug. And again, 31 to 15, it got cut in half. So that's another rider downer. 90-day charts, it's got a before bottom fishing, only bottom fish things have been cut in half or more. And PTO, and it's been in a nice steady uptrend, so good stuff. And what else? Now, one thing, recognizing oversold is one thing that I've gotten, fortunately, to be pretty good at. I think that SOXL is great. I traded it very successfully. My biggest winning trades of the week, I should have put that in the thing, but my biggest winning trade of the week was doing 500 shares of SOXL that I bought right before the CPI, right? I bought 500 of it, and I bought 500 UVXYs as a hedge. UVXY started to crash, so I sold it instantly, and I let this guy run, and it ran all the way up here. So SOXL I'm fond of. I made quite a bit of money with that on Thursday. That's my biggest winning trade of the week was the 500 shares I bought. I think it was, 932, I think. Actually, I remember it was 932, and that was a good play. And TQ is similarly strong, right? I like the directional strength in SOXL better than TQs for long play, but it's also my second favorite long ETF, right? So it's got 18 to 23 as a range. SOXL, it's a lot cheaper, and it's got 9 to 13 as a range. So it's got a really good range. So I like this one a bit better because the range is good, but it's fine to trade too. TQs is acceptable. I like this one a little bit better. Now for the inverse side of things, TikTok. I think SQs and SOXS are both way the heck oversold down here. big picture. So I bought a little bit of each. Again, I won't say against my better judgment, because the upside range is so big. So with something that's stretched that far, I buy a little tiny bit, and I fully plan that, maybe half the time or more, they'll probably create a stop loss. Like it may gap down to 31 on Monday, but I only bought like 50 shares or something. So I'll take a little tiny stop. Now, if it gaps up, then I've got a foothold, and I can start climbing up and position sizing and using a martingale or reverse martingale, whatever, double down on it every point or so, every point or two. UVXY is down there, it's 52-week low. So I bought, I'm in over 1,000 now. I bought 500 into the close because it didn't really lose support on the 2-day. If it doesn't lose support on the 2-day, or if it's gone extreme and starts to bounce, it may be a pivot. Now S&P, you can see, has been really good to the upside. Kind of slow move up yesterday, big move Thursday. I was thinking we get an inside day, right, on Friday, but it didn't. It's a small gap, but not much of a run, right? Didn't go much of anywhere. And gold was really good. Now I was trading down here, but I missed this run up. Pissed me off because I knew correctly it had been oversold and being good for a bounce, but I missed it. So say la vie, right? Have you ever done that? It's like directionally you know that it's a good trade, but for whatever reason you didn't get a piece of it. I did get it back here, and I got a little win, a little move, but I didn't get the biggest move of the day. So a little disappointed in myself, but that was kind of late in the day. It's after 11 o'clock, so I wasn't carefully monitoring the charts, and sure enough, it ran up without me. Have you ever done that? It's like you think it's going to go up, and eventually, yes, it does go up, but you didn't trade it for whatever reason. It's kind of frustrating, a little disappointing, but it's still really good this week. So good to hear about the PPI on Monday. No correlation that I've seen. Let's see, from Lisa, 2-day rule, I mean, use 2-day time period or 2 days of candles. Yeah, today and yesterday of the pattern of what you're trading. So for example, Sam Cole, I bought some of this into the close. This is one that I didn't add to the list there, but it's one that I did buy in the close. I will buy it if it gets up to new highs. Now for swing trades, again, I don't buy 9, so I'll wait for it probably to get over 20 before I put on any large size. I may scale in a little bit, 19, 20, 19, 30. The main thing though is the exit. It's much more important to identify exit. So I will stop out of this if it gets under 15, right? Just like with, say, my DraftKings position that I put on yesterday. I will buy it over the 15, okay? And on the 2-day chart, what was Friday will now be moved over one come Monday. So if it gets under 13.4 or so, that would be the new 2-day low on Monday, because we'll have the Friday chart will be on the left side of this. This is 2 days, and the Monday chart will be blank, right? I would sell under 13.4 and I'd buy over the 15. So it's very simple. You just use the 2-day range and use that to do that. Say a question from John, is my stop a percentage? No, it's just a price action trigger outside of the 2-day range. So whatever the breakout, 20 or 30 cents above the 2-day high is a long signal, and ditto 20, 30 cents below the previous low is a sell. All right, well, I'm going to wrap up for now. I want to thank you all for being here. Just a reminder, I do have the coaching program. You might want to take a look at it. I don't have a video yet. It's on my busy to-do list, but it's my first coaching program in 5 years I've done. I got so many new members on board. I'm really excited about it. I got a lot of people who put in applications. I've approved roughly 2/3 of those. So, if you're not yet an applicant, it's free to apply. You just have to answer a quick little questionnaire. I decline people who are like Forex traders or E-mini traders or options traders. This is for stock and ETF, swing and day traders. Anyway, trademastery.com/action. Or if you want to check out the live room, that's at trademastery.com/live. So have a great weekend. We've got lots of volatility coming up. End of the year tends to be a rally time, so we'll see if this is just a bear market rally that capitulates and goes down, in which case we get back in our inverses, or if it goes up, we play some of these charts like DraftKings, Coinbase, Peloton, Plug, Neo, and others that may be going up. I'm also, by the way, strategically a big fan of things like Amazon and Meta and Apple. Those are 3 large caps I like, and Disney too, for that matter. Well, not Disney, not yet, but I like Meta, especially. I think it's gotten maybe a bit oversold, so Meta may bounce. Amazon and Apple. Those are my 3 large cap picks that we'll take a look at. Let's close by looking at the swing charts on those guys. I was trading Meta earlier in the week. What a stupid name is Meta, right? I called it long for members right over the 100. Remember, I use things like even interval, so I called it long over the 100. I think it's 102 if you're a live member. I forgot. Anyway, it's up now. Meta. Let's look at the 6-month chart. Actually, let's look at the 1-year chart. I think that's a buy. Would not surprise me to see Facebook get back up to say when. My target would be, again, so this one we trade what? Who can tell me? What would our exit target be on this? I know Smart Trader Mura will probably have the correct answer, but who else among thy traders? If we buy here, say we're the 120 or whatnot, where would our exit target be, knowing how I trade? Daniel, John, Tony, Paul. No. For a swing trade on an instrument with this range, it's much. Mira got it wrong. William got it right. Bill got it right. He got it right. No, most of you guys got it wrong. No, when I swing trade to make money, and so it's a volatility play. Russell got it almost a little optimistic, but close. The range. Again, we're trading ranges. So if I buy the 100, I'm looking to sell on a chart that ran up to 360. I'm going to scale into this guy. My target on this 120 buy, my exit target is going to be like 180, 190, right under the 200, right? I'm playing the 100 to 200 Darvas box. Be sure to read the book by Nicholas Darvas called How I Made $2 Million in the Stock Market, written back in the 1950s or 60s, before all this internet, when you had to fax in your orders to a broker and all that kind of stuff. The guy made $2 million. Darvas boxes. I use box ranges religiously. They're very, very intelligent. You add some secret sauce like your candlestick patterns, directional volatility, expanding ranges. But I'm playing this to win, right? So I'm going 120 to 200. That's my range. I want to scale in 120, and if I get it to 180, 190, 200 would be best case, but I'm happy around 180. So congrats to William. You get the gold star of the day for that call. So I'm not going to trade a $100 stock for $10. Why am I going to do that? That sucks. That risk reward's no good. I like to make big money, and I like to lose little money, make bigger money. So anyway, that's the range on that. So Meta looks good. How about old Amazon? Amazon. Dun 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 dun. Now this one, I'm not gonna like buy. So it's right near the 100, which is great. Previous support is right near 102 or 3. Every market technician and their brother, I'm sure, issued a buy order on this thing on Friday's close, right? And if I had seen this, I would have bought some myself. I didn't buy Amazon. I don't think. No, I didn't buy Amazon. But this is a recovery over the 100. Now this one is not going to go. We're not going to get 200 out of it. On this particular one, exit target would. So then I have to ask myself, is it worth trading at $100 a share? That's kind of marginal. I've got better ranges percentage-wise than this guy. But the play would be long. I'd say 105 with an exit target up near maybe the 130, 140 at the most, right under the previous peak there. So then I have to ask myself, is a $20 delta worth my capital? And the answer probably is no, because I want, for $100 a share, it better have a much bigger range than that. So I'm not a huge fan of Amazon, but that would be the play. We take a look at Apple. No, that's choppy as heck. That's no good. In narrow range to boot. Disney, the range is okay. It's starting to come to life. Last time I issued a long call at the 101, and I said to sell the loss of the 120. So it's like a $15 win for my members that I had spotted that first breakout over the 100, right? I called it, I think it was 102 was a long call, and 118 was the sell signal. We're getting back to 100, so I will reiterate that. I would buy Disney over the 102, hard stop at like 98, something like that, no more than a few points, and exit target would be up near the 125. At least, so yeah, the pricing and all that's in the FAQs on the page. So I've got all the pricing and the outlines and also the calendar and all the rest of it. So give my word, the coaching program will be good. Two of the big advantages from the coaching program over everything else I do is one-on-one access to me. So I will do a lot more one-on-one go over your trades with you, do personal Zoom calls, personal phone calls. You can email me and I'll answer questions and all that kind of stuff. So the coaching program, it's a whole year long, and it's a real bargain compared to what other people charge. And I'm a real trader, so I can help. So yeah, I'm proud of the coaching program. Put a lot of work into thinking about what I wanted to offer. And we've got structured, live online Saturday webinars. They'll be like right after these, every other week, where we can go over trade reviews and a lot of new topics, plus live room access, plus one-on-one coaching phone calls and the rest of it. So that's my coaching program at trademastery.com/action. Action. And I hope that I can give you some meaningful, intelligent, step-by-step how to trade, what's worth trading, how to get out, how to scale in, how to scan, and how to make a sensible trading approach and a trading plan that serves you well. That's what I'm here for. So I've got a lot of experience with P&L proof and tax return proof and all that kind of stuff. So I hope that I can be somebody that can be of value. The coaching program, let's see, there's two different tiers. I got one that's 10K and one that's 25K. The one with 25K has a lot more personal coaching calls, but the pricing details, it's on the web page in the FAQ area. Somewhere here. We got the schedule. I put a lot of work in this, as you can imagine. We've got a lot of new members, folks who have applied already. I've accepted I think just under 2/3 of the people who have applied I have approved. And I'm only limiting because I have to do a lot of phone calls and personal one-on-one work. And there's only one of me. I don't relegate this to some second tier person that's not my expertise level. It's just me with you guys one-on-one on Zoom calls like this and or phone calls if you prefer. So that's so I limited to just 35 total, and it's starting to fill. We're not near capacity yet, but we're starting to go up. So I do have 35 slots that I will do, and once it's once it's full, it's full. So, but the main thing is ask yourself, do you want some personal help with big advantage is personal trade reviews. Like we can go over like your last 5 trades, and I'll tell you step by step what I would see that would keep me out of the trade. Or if it was a good trade entry, maybe your exit wasn't as quick as it should have been. What signal could you have looked at to help you lock in a gain before it went back down, and those kind of things. So I'm really eager to work with you guys on this because I think it's kind of like the next step in what I do is a lot more interactive, personal one-on-one help. Because there's only one of me, though, I'm not going to open it up to hundreds of people like I got in the live room. So, and again, there's my Fidelity, what is that, the 1099 or something? Yeah, that's a 1099 from last year. Yeah, it's my 1099 from Fidelity. And I did trade 41.6 million worth of equities and ETFs last year alone. That's more than probably most trading educators trade in their whole lifetime. Most trading educators do not show any tax return proof because they don't really trade. They are bullshitters. They are internet marketeers. They trade with overseas brokers on demo accounts and try and pass it off as real money trading, brokerage, screen cap, and crap. Ask and demand for 1099 or 5898 tax return proof before you learn from anybody, because there's so much bullshit out there in this industry. If they can't even show you a 1099, what are they hiding? They're hiding the fact that they don't really trade. You guys, I'm 100% confident. I've been in this business 20 years. Most of the educators are full of shit. Emmett's reviews are brilliant at the trading school site. He said I was one of only 5 traders who had even shown him proof of a profitable real money trading year. 5 educators out of hundreds he's looked at. That's Emmett, smart guy. Anyway, the point is, make sure that before you trust anybody, they show proof that they do actually trade at a minimum. That's very important, because most of the people in this industry, you guys trade more than most educators. I'm 100% confident that on average, if you've looked at the number of trades over all the hundreds of you here, you guys trade more than the educators because they're just marketers. So learn from someone like me who actually does the trades and puts in the work to try and figure out the difference between what works and what doesn't. That's what I sell, is the difference between my wins and my stops, a ton of experience. So you guys don't have to go through plowing through years and years of doing this yourself. I can give you very quickly what I've learned that's relevant for the difference between success and not. So hopefully that'll work. Yeah, and I agree with Mark. So good points. Thanks, Brock. Appreciate it, man. So that's me being honest, very, very candid. I don't make millions of dollars a year trading. I don't claim to make any big fortune trading, but I've learned a lot and I've had profitable years and I do have the experience and I can share with you what I've learned. And I'm glad that so many of you found value in that. So do take care and I will see you guys. I will see you guys next. And thanks to those who rated me #1 in the world for stocks and commodities articles. A couple of years ago, I was rated #1 and #2. I got both the gold and the silver award. So yay! I guess that's it's an honor. So I appreciate that. So anyway, you guys take care, and I will see you when I see you. And I will. I haven't had time, frankly. I've been too busy. So many trades I've been doing, and so many new members on board. I've been answering questions and updating the websites. My goal is to get a video produced sometime soon, but it's basically just what I told you. I should have just recorded this and made that the video, but anyway, that's it. So, hey, thanks, Lisa. Appreciate it about this X. Thanks, Neville. Appreciate it. Totally impressive. Well, thanks. Hey, John. I'm not an options trader, so I trade with Fidelity because the zero commission. I spent over 30 grand in commissions back in, it was like 3 years ago. I think I had a screen cap of it too. Share with you. And I'm a big fan of proof, right? So whenever anyone in the trading industry says something, make them prove it. Let's see. There, okay. There's proof for my Fidelity. This was back in 2019, so 3 years ago. And look at my commissions paid. I spent $33,000 in 1 year in commissions. No bullshit, right? That's my Fidelity, the actual from Fidelity. So that's why I trade with Fidelity now, is because they got rid of commissions and it's zero commissions. So I like saving 30 grand a year. Actually, it would be more now because that's only on, commissionable trades was 200 in a month. Year to date was 6,900 trades. I do thousands of trades a year and I learn from them. I do my damnedest to learn from them so I can teach you guys and also help me improve my own trading outcome. So, I'm a guy who actually really trades. So you don't see that authenticity from any other educator in the entire world, do you? Does any other educator show P&L proof of commissions paid, of 1099 tax return proof? Does any educator show that? They don't, because they're full of shit. All right, I'm honest. Okay, so makes a difference. All right, you guys have a great weekend. I'm out of here. Take care and trade smart. And hope to see you in the live room. Anyway, see you guys next time, and visit my site at trademastery.com. And I'm here to help, right? I've learned a lot the hard way. As with most things in my life, I've learned things the hard way through a lot of failure and experimentation and practice and experimenting. And I get better and better over time. And I hope that I can help accelerate. The main thing is time, right? We can't replace our time. So if I can speed up your learning curve and give you all these quick, shortcuts and tips and adjustments to your trades, try and get it tighter and tighter till it works. So take care, and I will see you guys next time.